this point in time, we have a panel discussion on the importance of access to capital for small business success. And the moderator is to be Grover Brown, and our panelists were Corey Green and Reginald Smith and DeAndre Peterson. And I know that Mr. Reginald Smith is currently present, and I believe that Mr. Green is also present.
Good morning. My name is Grover Brown. Thanks a lot. I'm glad to be here this morning. Glad to be a part of this great Booker T. Washington conference that's happening this morning, this historic conference. Thank you, Dr. Vaughn, for the introduction. Small business, where do we begin? Black business in the American community has always been a staple, has always been important, has always been that key catalyst that has helped things to continue and to move forward. And so this morning, I'm glad to be a part of this great conversation that we're going to have to talk about small business and to talk about the challenges of small businesses and access. We know that a business cannot grow unless there's a significant capital for that business to access and for that business growth and being able to scale up. Traditionally, most businesses in the other communities access to capital such as 401ks, generational wealth, as well as wealth that is passed down and wealth that is made available to them. However, in our situation, our social situation, which has prevented us from being able to tap into those traditional types of capital through families and friends. Our businesses are therefore then challenged in order to tap into business and into those dollars. This morning, we have with us Reginald Smith. Reginald is with Sabre Financial. And then we also have Mr. Corey Green, who's with Regions Bank. And we're just going to have a conversation, and we're going to talk about the challenge of gaining capital and the significant ways that their firms and their organizations are helping minority businesses to access capital. First of all, I'll give the gentleman a chance to go and just introduce themselves, introduce their organization, and give us some opening statements. So Mr. Smith, you will begin. Greatly appreciate it.
Excellent. Outstanding. Good morning, everyone. I just want to say on behalf of our CEO, Dr. Ray Morris, and the Sabre Finance family, we greatly appreciate the opportunity to be here with you all today. I'll never forget the first time I came to the Booker T. Washington conference, and I saw the influence and the inspiration. There were college students there. There were that wanted to be entrepreneurs and so many different people from different walks of life. And so I'm just thrilled to be a part of what's taking place today. And so a little bit about Sabre Finance, we'll talk and continue to go on, but Sabre Finance is a nonprofit lending institution. So my colleague, DeAndre Peterson, will speak as well. We both work for entities that serve in the seat of community development financial institutions, which is a fund that was erected under the U.S. Treasury. And so that's part of what we do. And we both also are micro lenders in the state of Alabama. And so that's kind of what the perspective that I know that both of us will be speaking from today. But again, we're glad to be here. We're headquartered here in Birmingham, Alabama. And so we serve the entire state of Alabama. And so we believe that, that's the heartbeat of small business, is being able to help them get access to capital. So I look forward to this conversation and where we'll go. And again, thank you all for having us.
Okay, thanks. Next, we'll have Mr. Peterson. If you would go ahead and, I'm sorry, Mr. Green, Mr. Corey Green, if you'll go ahead and give us a brief introduction about what you do at Regions Bank and how our region is helping to expand access to capital here in the state of Alabama.
Sure. Good morning. Again, I'm Corey Green, Commercial Relationship Manager at Regions Bank. I'm certainly glad to be on this panel with so many, of my colleagues that I've had the pleasure of working with Regions does have a heart for the community. I will say that Regions is a for-profit lending institution, so there are a lot more factors into how we come around to a decision, but we also participate very well in other elements of our giving and our lending as it relates to community development. That's one of the things I'm most proud of about Regions. So I'm looking forward to the discussion. I've been in this industry for different banks in different roles, everything from a branch manager to an associate to a commercial relationship manager. So seen a lot, talked to a lot of folks, know that there's a lot of pain out there around financing and capital. Hopefully we can unpack some of that, dispel some of the myths that are out there and really point people in the right direction as to how you get access to this capital. So looking forward to it, and thank you.
Great, thank you, Mr. Green. I forgot to introduce myself to give a background about who I am and where I come from. My name is Grover Brown. Once again, I'm Director of Lending with Community Enterprise Investments. And Community Enterprise Investments is a multi-state community development financial institution that operates in Northwest Florida and throughout the state of Alabama. We're headquartered in Pensacola, Florida, but we do a lot of investing, community development, investing in small businesses throughout the state of Alabama. Our biggest product is the SBA microloan, where we create inventive, in a sense, opportunities for small businesses to access wealth. Want to begin with a question today, and I guess
Mr. Brown, this
first question.
Hey, Mr. Brown, hey, this.
All right,
I'm sorry, man. Look, I'm here. Look, I think I was on the participant side, so I was talking and couldn't get in.
Okay, great, great, so, DeAndre. Great, yeah, DeAndre Peterson with LiftFund. Go ahead, DeAndre, and give us a introduction of who you are, who you're with, a little bit about your organization.
Absolutely.
If you will.
Absolutely. So sorry about that. Again, my name is DeAndre Peterson. I'm business development officer with LiftFund. We're the largest nonprofit micro lender. Basically, kind of boil it down to what we do. We try to fill that void when a small business may not be bankable yet. So you may go talk to Corey, and Corey really wants to do that loan, just can't do it. And so no, he referred to us. And so what we do is offer those loans starting at $500 and go up to $250,000. In addition to that, we also offer the technical assistance, the business education, credit education on the other side of it. So we're just happy to be here. We've been a part of this conference for a while now, so we're looking forward to adding to everything that's going to be offered today.
Okay, great, DeAndre. Thank you very much. To begin with, gentlemen, let's talk about what are the challenges from a lender's point of view for African Americans obtaining capital, especially with African Americans who are just starting their businesses, whether it be startups or better yet, existing businesses. And from your point of view, organizations, what are some of the challenges that you see? And we'll start with Mr. Green.
That's a great question. One of the first challenges is to identify what season you're in as a business and are you ready for a loan? You know, that's some of the conversation that we have on the front end of helping people identify exactly where you are. Loans are not designed to help you make it through a season. PPP was that for a lot of folks, but lending is designed to help you grow once you have demonstrated that you are a profitable business. So some of the initial challenges that we face once we have a conversation, it's just documentation that's required to apply for a loan. So, keeping up with good records, having your documents that show that your business made money, not having a lot of write-offs that aid into your profitability, and also credit score. People, have to understand that your personal credit will impact your ability to get a traditional loan. So those are the initial things that really kind of drag the process out, make it very unpleasant for the end user, make it very confusing for the end user. And a lot of times we're not clear and direct on what we're looking for, how this thing should go, and that therefore you have misguided expectations and disappointments. So this system does, depend on numbers. It does depend on information and documentation, not just the need, not just the talent, But it has a lot of things associated with it. So you need to start by having that conversation with your banker or whoever your institution is to say, hey, this is what I'm thinking of doing, and making sure that you have aligned yourself and positioned yourself from a documentation standpoint, from a credit standpoint, from a cash flow standpoint, to obtain a loan and show that you can pay it back. So I know that sounds basic, but those are generally the challenges that we see on the banking side when it comes to, obtaining small business credit for our community specifically.
Okay, Mr. Peterson.
Yes, absolutely. And, just ditto to everything Corey just said. I mean, in addition to that, what we're running to now is that there has been a lot of money that's out there with the PPP and idle loans and different things like that. And we're telling businesses, it's a good time to get money, but it's not a good time for a brand new startup business to go and think they're going to get that money. and it's not. And what we're finding, especially in our communities, people are sloppily throwing together plans in an attempt to go and get funds for that. And what I try to explain to them is, okay, let's start with a solid business plan. A business plan, take your time to make sure that even in this COVID economy, you just can't, this is probably not the best time to start a restaurant when, the one that's operating or 20%, capacity right now. It's probably not a good time to start a daycare. It's probably not a good time to start some of the industries that are being affected by COVID. And so in addition to what Corey just said, just having a good plan, just having a good plan that, and these opportunities are there. You have the SBA, you have the SBDC, you have, organizations like Sabre Finance and LiftFund and different banks and everything that'll help you with that. So just having that solid business plan is definitely where, and that's a step a lot of businesses want to skip over because we want to get right to the money. But that is the most important step.
Okay. All right. I've had to utilize two devices here. We're currently going through a hurricane down in Pensacola. Excuse me, there's a dropout. But Mr. Smith, if you'll go ahead and answer that question.
Sure. It's hard not to sound redundant in the moments like this, because my associates are absolutely correct. And I would add, if I had to add anything to that, is that we kind of take a bent in this conference towards specifically Black entrepreneurs. And one of the challenges that I'll think, and I thought the gentleman prior to us did a great job of talking about, is that I like to expose and help specifically Black business owners understand that you're not supposed to know all of these things when you come to the table. Meaning that because of if you haven't been to college, you never took a business class before, you never, so if you didn't go through a business curriculum, you don't have what's called a general baseline of business. Meaning that how the economy works sometimes, how economics work and things like that. And when those things are not in place, it makes it very difficult for you to engage in a system that you don't have any information on. And so a lot of times when we're talking to them, we're giving them the way that it works. And it's mind blowing. It's like, okay, I didn't know that. I had no idea. And they begin to have these internal experiences, negative emotions that come up, and it douses out the flame that's burning on the inside of them to do this dream. But a lot of times we're not trying to do that. Our goal is to get you to where you need. And that causes them to back off and say, well, I'll just figure out another way because I'm a hustler and I grind and I'm just going to figure it out. And we're trying to tell them you can have all of those things, the hustle, the grind, but you're still going to need these key metrics or these key specific things to get you across this finish line where we're trying to get you to. And so I think that the willingness, we can call it humility, we can call it the openness to listen and say, you know what, and accept the reality that I have no idea what I'm doing right now in this area. I know how to do what I know how to do. I know how to bake cakes. I know how to fix cars. I know how to cut grass. I know how to drive trucks. I know how to do hair. I know how to do whatever I know how to do. I could do that. But this other side of it, I don't know how to do it. And the moment we can get you to embrace the fact that I'm not really sure what's going on here, and build some degree of trust, and that's hard because you don't know me and I don't know you. You don't know Corey when you meet him, and you don't know DeAndre when you meet him. But I promise you, if you give us an opportunity, come to trusted individuals and entities that are designed to help you, that we can really help get along the path and those uncharted waters that you've never traveled before. And if I had to speak to a challenge, I think that's one of the biggest ones: the lack of trust and the challenge we're going through that process, because it seems like you're going away from your goal a lot of times. It's like, I'm not getting there, I'm not moving fast enough. But really, it's almost like wax on, wax off, like the Karate Kid. He had no idea he was learning karate until he began to put those things in practice. So if I had to share something, that's what it would be.
Great, great. Thank you, Mr. Smith. I believe the uniqueness about this panel is that we all are at a different level along the ecosystem of business lending. Mr. Green, you're at the Regions Bank, which do small deals up to multi-millions, billions. Reginald Smith, you're a CDFI. I'm with a CDFI that specializes at the base level. DeAndre, you were the CDFI as well, that goes a little bit higher than some of us. But I guess the key is, understanding where we are with our levels of platform. How important is technical assistance in helping the small businesses get on the path of getting to their goal? Because, Mr. Smith, I think that's one of the things that ultimately African American business owners who are new to this environment, they have to begin to embrace technical assistance. And so, how is it important that in with what you do and where you do it at? We'll start with Mr. Green.
I mean, it's critical. Again, when we're talking about lining up a business, and we're talking about capital access, right? So you can do your thing,
Yes.
you can make money, you can really provide a living for your family. But when we're talking about growth and expansion, that's where it really gets tough. And for most business owners, they've spent so much time and energy on their talent, developing their thing, their widget, whatever they do, that they haven't really studied. Like Reginald said, you don't know banking. I didn't know banking until I got into it. And it's a very different world. So I don't expect for anyone that's not in banking to understand it. That's just my baseline when I meet people. I've met with doctors, dentists, lawyers, et cetera, CEOs that don't understand banking because it's different and it's ever changing. So we need someone that's there to help people keep up with the ever-changing target that it seems to have on how do you get a deal done. There are some fundamentals there that we still cannot ignore. You have to be a good deal to get a good deal. And I'll be very frank about that. And I say that all the time. If you have good credit, good cash flow, low debt to debt coverage, low debt to income ratio, you can get a loan. You have all of us fighting over you. And so again, it's about really understanding what it takes, but it takes a professional to help you get there. We have the Business Research Center here in Birmingham. We have several different places that help you with technical assistance. It's just a matter of getting out there and doing it. So that is one of the more critical areas of the entire process. Again, you can be talented, you can make money, you can certainly have an opportunity to grow your business, but if you don't have those technical packages together, that technical process together, then it's going to be a no-go. And that's going to be very, very deflating for someone who has, had the opportunity to make money and see a business thrive, but not have it grow. And that revisits some of the prior frustrations, right? We just heard an entire slide on how our community was redlined. And that's real. That's a very real thing. Banks have had to recognize that. I work for a big bank, a Fortune 500 company that has a CRA element to it now. And the biggest challenge for the bank, now that we have a mandate to lend money in the Black and brown communities, is finding credit-worthy individuals to do it with. So if we can get our game raised to that level, and I'll leave it like this. There's a lot of talk about lack of access that we've had over time. But that didn't stop our community from going full-fledged into basketball, football, baseball, etc. University of Alabama and everywhere else. We had Tuskegee around back then, and Black people can go there and play ball and all of this back then. But we wanted to get into Alabama and all this stuff too, right? So these institutions were not designed for Black people back then. They were strategically kept out. But once we got access to it, we figured out the game, and now we started dominating. It's the same thing with banking. Now we got access to it. There is a lane for it. Let's go ahead and start preparing our kids early on, training them up like we do in sports. You're going to be an entrepreneur. This is what we need you to do. We need to protect and build your credit. We need you to understand finances. We need to expose you to different business and technical assistance. These are the ways that we move the needle for ourselves. And then we have others asking us, hey, come participate in my economy because you're such a thriving business. That's where I see our demand going. So I know I kind of went off target probably, but just passionate around that specific topic.
Grover, I think you muted, Grover.
You're muted, Grover.
I'm sorry. Mr. Peterson, if you will go ahead and respond.
Yeah, and as Reggie said, you know, I hate to feel redundant, but to add anything, you know, you have to get into that world. You know, we are so accustomed to throwing around terms like assets and liabilities and SBA, FDIC, and EIDL and all that. You know, cash flow and that will those. As a small business owner, you don't have to fully understand what all those mean, but you have a working knowledge of those. And so it's getting into that world and understanding that it's just not about sales, you know. And I think a small business focus on I just need to sell my product or sell my service. Well, what happens when those sales dry up? Well, what happens when you get into a valley? You're not in a peak season. Well, now you need to go ahead and start, you know, talking to a lender about getting some access to capital. Well, how are you going to get the access to capital? As Corey said a few months ago, we're going to look at your personal credit, or that's something, you know, we need to look at on the front end. So just having that knowledge about what are small business terms, and you'll be amazed the small business owners that we talk to that think when they go and get an EIN and file an LLC and set all that up, that they got an 850 business credit score. And, you know, and as Reggie said, it's a shock to them when they come in, you got to give your social security number. And so wait a minute, I thought I was, you know, had a fresh start. And I was like, you know, that was the case, we all start businesses, you know, start from scratch. And so just understanding how the activities and the behaviors that you are doing now will impact you as a small business owner, and learning what those terms mean. You know, so it may be that you don't need to buy that car right now. That's going to be a $750 a month car payment when you plan on starting a business, because that's going to mess up your debt to income ratio, and it's going to be another ding on your credit, right? And it's going to be a liability. And so just those things, those terms, kind of getting into the world. A mentor of mine said that if you're going to get into something, say get in neck deep or don't get in at all. So when you get into the world of small business, go ahead and jump all the way in and get neck deep in it.
Excellent, Mr. Peterson. Mr. Smith.
Thank you. I mean, I hope that, you know, and I get excited. I'm right there with Corey and DeAndre. I get excited about these conversations because these are the things that it would be a little different if I had a business owner sitting in front of me that didn't understand these things, and I can be a little bit more empathetic, you know, and I wouldn't try to, but I can give it to you pretty straight now because we're in a group setting and you're listening and you're learning and you're here to learn. And so you gave me the opportunity, you gave me permission to tell it to you like it is. And so at that point, but what I'll say about technical assistance is this. Technical assistance is a lofty term that means business consulting or business consulting services. That's what that means. A CDFI or a micro lender, it's required by the governing entity to provide technical assistance or business consulting services at no cost to you. The average price, according to Forbes and consulting.com, for a business consultant is $150 an hour. Okay. So if you were to go out and find somebody to do business consulting services for you, talk to you about your idea, your business plan, how to go ahead and prepare yourself to get funding, what different terms mean, they're going to charge you for every hour, they're going to charge you $150. There are countless opportunities for you in whatever state you live in to get access to this information for free. Okay. So whether you're going to the small business development centers in your state, or whether you're finding local CDFIs or micro lenders off of the SBA's website, you can get that information at no cost. Technical assistance is placed in that area I'll say this, it's a combat to the fact that we don't have the information as Black people. So I agree with that. So if there's places like forums like this for people who look like us and who don't look like us to tell us, hey, there's free information for you to go and get. Now, and when I go back to talking about the process, I need you, the Black entrepreneurs, to take advantage of these and take advantage at a high level. Because the more classes you go to, well, I already went to an Access to Capital class, we'll go to another one. Well, I already went to, a business planning class. We'll go to another one, because practice makes perfect. We've been hearing that since we were kids, so the more you expose yourself to this information, the better you will get at it. I didn't understand debt service coverage the first time they told me in a lender's class. I had no idea what it meant. I didn't go to college or finish college and have a high school degree. I'm going back to school now to try to finish my degree. And I'm managing director at Sabre Finance. But I had to humble myself. And when they were spitting out all these terms at me, I had to say, okay, I don't know what that means, but I'm going to write it down. And I'm going to ask a question. And then when this class is over, I'm going to go look it up. And I'm going to try to understand it. I'm going to go watch some YouTube videos on this. So as much as you can, get access to the information, because the information is how you win. I've literally had business owners come sit down in front of me who understood the terminology and what a debt service coverage was, and was able to show me on paper what their debt service coverage was. If a business owner walks in front of me and tells me what their debt service coverage is, my ears perk up, first and foremost, because they know what they're talking about. And I am probably a little bit more apt, kind of bent already in the right direction of being able to help these business owners, because I realize that they understand their numbers. So when you understand certain things and you're proficient in that, it helps you, it builds credibility. And so is it like school? Yes. You chose that you were going to be an entrepreneur. Entrepreneurship is not some sexy term that we're going to walk around in red bottoms and drive a Benz and live in $1 million house. That's not how it starts out. You can get there, but it's a hard road to be able to do that. And we want to be able to help you, and you need to know as much information as you can about that. And technical assistance is a term that says that I'm willing to give that information to you for free. So take advantage.
Great. Thank you very much, panelists, for just digging into that challenge and then being able to show the difference at each platform, and how important that getting information is before starting the business, before hopping in and making sure that you know what's going on with that particular industry. We have about, 8 and 9 minutes left, and we don't want to overrun. But I just had one more question. Bifurcation, there seems to be a lot of that in our African American community, where our younger generation is separating from our older generation. Our older generation traditionally started businesses in lower growth industries. But now we're seeing our younger people coming up who are educated. They're jumping into the higher growth industry. What are you seeing regarding financing tech, and how are you handling those? Because they are not brick and mortar, traditional lending opportunities, but they're tech. They don't have the collateral. They besides the hardware, the most valuable product will be the software and the service that they're providing. How can we encourage the young people who are going into these areas on how to access capital, especially when angel capital is not available or investors are not available? What are some of the options that you can provide them? Corey, Mr. Green.
Okay. That's a very good question. Again, the fundamentals don't change. There are industries that banks look to as very desirable, where you're talking about the medical field, certain professional services. There are some cash intensive businesses that are very desirable, but either way, you're going to have that 2 years worth of track record for anybody to look at you seriously on lending, if we're talking about lending. So again, you choose wisely what area you go into, but as we talk about an older generation, they save their money. They pull together funds from the community, from each other. And quite frankly, a lot of our white counterparts do the same thing as they start businesses. As it was mentioned in the prior segment, they have those resources within the community. So the banks don't necessarily even fund those startups. So, as you do develop in whatever industry, specifically tech, whatever you're creating, whatever you're doing, you want to show that that's profitable. You want to be, patient with your pursuit of credit. Again, don't think that you need to expand your business because you had 4 good months. You have to really get a cycle or 2 in so that you can really see the ebb and flow of your business, and a bank can see that. And finally, again, going back to the technical part, you want to have your finances and your documents in line to show that you have the capacity to take on this loan. So again, it takes time. You can't jump in and just get a loan. That's just not really how you start a business. And again, people have to really identify, am I doing something as a side hustle, or am I really starting a business? Those things take 2 totally different levels of commitment, investment, and really, financing. So I think the business owner does have to have a conversation with their trusted sources, their partners, and then say, hey, what are we doing here? What is our 2-year plan? What is our 5-year plan? Because credit really shouldn't be a starting point for any business.
Okay. All right. Thank you very much. Mr. Smith.
That's great. A couple of things I want to piggyback off of, and I want to make sure you heard what Mr. Green said as far as that there's certain he said that he used the term desires. I'm going to use the term appetites with lending institutions. Like, there are certain appetites that lending institutions have. One of the most common mistakes that business owners make in general, but specifically Black business owners, because most of them don't know that this exists, is that banks have a portfolio. Okay, they have, what that means is they have a package or a bag of loans that they have. And in that bag of loans, they have a certain mix of things in that bag of loans. And they're going to say, I only want to have a certain percentage of certain things in this bag. So whether it's real estate, or whether it's unsecured loans, collateral loans, equipment loans, and things of that nature. As it pertains to tech, you may be on a list that they don't even want to touch with a 10-foot pole. And what that means is it's going to be very difficult for them to get comfortable with that loan, because those are not the traditional type of loans that's in the bag. So if it's a loan that hasn't normally been brought to the table, that means that we have to figure it out. And when a lender has to figure out your industry, and you don't do a good job of bringing the information, all of this comes full circle. The information that we've already been talking about, the business plan, how you're going to make money, how you're going to be profitable, what's your debt service coverage, what is going to be the return on the money that the lender is going to get. When you can't do a good job of presenting those things, and the lender has to find it out on their own and make their own assumptions, it's going to be very challenging for you to get money in that area. I'll just be upfront with you. I'm not saying it's impossible. It's going to be very challenging. If I had to speak to someone that's in tech or looking to get into tech, I would encourage them to look for CDFIs or lending institutions that are specifically engaging tech-based businesses, because they exist. There are a growing number of them that are specifically engaged in tech-based companies, meaning that technology is in everything now, but a business that's primarily going to be online, or e-commerce systems, or some that you develop some type of product or manufacture some type of technology product. That is becoming more common for that to take place. While here locally in Birmingham and throughout the state, I don't see a lot of that, but that is becoming more of a thing, and they have their own circles and they have their own kind of groups that they hang out in. And so I would try to pry your way into that. If I had to give a name, I think Bronze Valley is the CDFI that's here. They do a lot with tech-based businesses. And so if you're in the Alabama area, that would be something that you want to take a look at. But far as tech goes, you have to find the right people that are interested in tech and understand tech to be able to help you to navigate that space. Because we deal a lot with service-based businesses. We deal a lot with lifestyle businesses, which are restaurants, coffee shops, things of that nature. That's lifestyle. Service-based businesses are medical, your dental providers, things of that nature. And then you have manufacturing business, people who build stuff and manufacture things. So that's kind of called the C&I, commercial and industrial world. So that in and of itself, we did a lot in that space. And when you say tech, now we're having to go research and figure it out and things of that nature. And it becomes very difficult. And it can also kind of be discouraging to the borrower. So I said a lot, but look for the tech space. That's what I would encourage you to do, because every lending institution is not into tech. And sometimes when you approach someone that's not into tech, they can seem very uninterested. And most of the time it's because they don't know and they don't deal in that space.
Thanks a lot, Mr. Smith. Mr. Peterson, you're last. And as a matter of fact, our time is about to wind up. Dr. Vaughn is looking at us.
No, sir, not at all. I just wanted to bring to your attention, Mr. Brown, that there was a question that was submitted in the chat box. I'm not sure if our Q&A box is active or not accessible to the attendees, but just wanted to point that out to you. Also, there was built in a 20-minute gap between this session and the next, which is supposed to start at 10:30. So you do have quite a bit of leeway. Just wanted to bring that to your attention, sir.
Okay, thank you, Dr. Vaughn. We'll get to that question after Mr. Peterson responds.
Yes, the only thing I will add is kind of reiterate that it's tough. Take it in, just going to be honest with you. It's tough. Like you said, Grover, you don't have collateral. We can't necessarily come and get your, system, your computer software, different, and so it is tough. The only other thing I will add is that if you are in the tech industry, find a mentor. That's going to be extremely important. Find someone who's walked that path already. So you may have to be creative about different financing options. And as Corey said, if you think banks are conservative, just in general, I mean, we are too when it comes to tech industries. That's as Reggie said, we are. And so it's important, as he said, to find those individual organizations that are specializing in that. It's going to be tough. It's going to be tough. So bootstrapping and different other, crowdfunding type, you may have to look into some non-traditional ways of financing, especially if you have a product that you're developing. And so you're going to have a long stretch of time to where you're spending money, you're not making money, a long period of time. All right, but you still have to market your, you have to pay possibly staff and buy this software and this equipment. So it's going to be very important to find a mentor. We also have some of those, you can call SCORE, and talk to someone at SCORE at no cost to you. Just kind of get advice. Because tech is flashy, it sounds real flashy to get into, and it is very lucrative industry. But we don't see the other side of it, to where those individuals, where they may be making a lot of money now, and they are also in a lot of debt from the early phases. So definitely make sure you get your mentor to help you walk along that process.
There was a question. I know that you esteemed four gentlemen are in the banking community and very accomplished at such, but you're introducing some interesting acronyms that our audience may not be aware. So we had a private question asking what a CDFI was, and you just may want to take into account some of those things that some of us people who were not educated in finance may not necessarily be following you. So thank you very much. I appreciate it. I was just asking for a friend.
No, that's great. I'm glad you asked. I don't know that person missed it early on, but I do try in the introduction, and I probably should say it more, but it's just very long in the middle of a sentence. And so I apologize about that. But it is CDFI stands for Community Development Financial Institution. Community Development Financial Institution is short for an explanation that it's a fund, Community Development Financial Institution fund, that was started in 1994 under the Clinton administration. It was under the U.S. Treasury, so it's under the federal United States Treasury. One of the entities is the CDFI fund. Entities or nonprofits go to them, fill out an application, and apply to become certified to be able to do the work. The work is to assist minority business owners in underserved communities, and by giving them technical assistance and access to capital. So that's what that is. But I apologize that if you were confused this entire time. So I hope that fills in the gaps of what that means. And so, but it's just very long to say in a sentence instead of saying CDFI. So thank you, Dr. Vaughn.
No problem. I'm sorry, Mr. Brown. Please continue.
Okay, and if I might add, with Community Development Financial Institutions, it's an excellent way to get capital to the community because the CDFIs are unregulated. The banks are regulated. So Mr. Green will tell you they are constantly looking at the CDFI. We can take more risk. Whereas Mr. Green's bank will not make that loan, but we can make that loan. So Mr. Green's bank will invest into our CDFI so that we can take a greater risk to help small businesses. And so, well,
can I, Mr. Grover, Mr. Brown, do you mind if I kind of chime in on that?
Go right
Because
ahead.
I agree. And the beauty about that is that because that's where the hidden information is, the hidden treasure, because a lot of people don't know that. A lot of people don't know that the bank realizes that they can't help you. And so they realize that, and they're being held accountable for that. So they have an aspect in the business world that's called social responsibility they have to abide by. And so as a result of their social responsibility, they say, okay, let's find a LiftFund. Let's find a Sabre Finance. Let's find a True Fund. Let's find these entities that we can invest in so they can invest in these people, and we can keep our regulators happy, because that's what it is. We can keep the regulators happy, and they can actually do the work. Now, we are unregulated as CDFIs, but all CDFIs are not made alike. And what that means is, me and DeAndre, there are certain things that DeAndre does really well that I don't do very well. They do a lot of real estate loans. We don't do a lot of real estate loans. Or they can do real estate loans. We don't traditionally do real estate loans just because of the capital that we have. And there are some unsecured things that DeAndre will call me about that may not work at his institution. And we work together. In your area, most of your CDFIs probably work together because they have their own boards. And especially if they have bankers on their board, it becomes a little challenging. Okay, so you may go to a CDFI and they may say, yeah, we can't do that. And then you're like, well, they did it at Sabre Finance for me. We're two different organizations. So while we're all micro lenders, we're all CDFIs, we have different hierarchies, we have different people that we apply to, we have different lending policies. So get acquainted with everybody. And again, you have to know the terminology, or if you don't know the terminology, just ask. That's why I say you got to tear down that wall and come in and say, hey, this is my business and this is what I'm trying to do. I'm trying to buy equipment. You go to DeAndre and you're trying to buy some equipment. 9 times out of 10, he's not gonna call me and tell you that he needs some help with that deal. He gonna make it happen for you, because they can do that and that fits in their wheelhouse. But if you need some, if you need some capital or something along those lines and it doesn't fit, we can work together. So just still in that space, you have to know what you're looking for. And if you don't know what you're looking for, tell us, I don't know what I'm looking for, and we can help you. And then we can get you to where you need to be. Because everybody is doing different things and everyone still has their own mission. We're nonprofits, so nonprofits have to have a mission. So I kind of wanted to make sure that that's very clear, that you understand, and don't make that be a lack of confidence point for you. Go out and ask those questions to the right entities, and we'll help you get to where you need to go.
Great. Thank you, Mr. Smith. There's one question that's here. And the question is, have any of the panelists educated themselves on the infinite banking concept? And if so, what message would you share with regard to the benefits of this banking system? R. Nelson Nash is the individual credited with teaching this banking system. His books is Becoming Your Own Banker and Building Your Warehouse of Wealth. And then the Total Twins are a volume of children books that are teaching this banking system. Any of our panelists, are you familiar with the infinite banking concept? Okay, I'm sorry.
So I'm not fully familiar with it, but I wanted to be able to at least speak to it. So I Googled it while we were waiting.
Okay.
So what it is, I agree with part of it. And I'll tell you why. I agree with becoming your own banker, because that's what I've basically been telling you since I've been up here, is that you do need to educate yourself to a level to where you can be dangerous enough in the conversation. If a banker's been doing the lending for 15 years, they just have more years on you. So they're going to have a little bit more scenario-based information. But learning the process, everyone needs to learn how to do that. Whether you're black, white, but specifically black business owners, because of just the lack of access to information that we've had historically. Our great grandfathers didn't have information, so our grandmothers in a lot of cases didn't have information. My grandmother was 87 as she died, and she lived her whole life on government assistance. So she didn't have information about 401ks and generational wealth and none of that stuff. So I had to learn it. My mom didn't teach it to me. I had to learn it on my own. So I think it's critical for that point. Using life insurance policies to build cash flow. I have some challenges with that. I would like to dig more. I would love to have a one-off conversation with you, because I would want to know and look at that life insurance policy and see how much cash value was in it. When was it started? Cash value builds at a very slow rate in insurance policies. And so I would want to definitely take a deeper dive and from looking at that from a perspective of using it to start of a business. Because I agree with Mr. Corey Green that capital shouldn't be your starting point. Your idea should start to generate revenue, and growth should be your reason that you're seeking capital, not to actually start the business. And so I believe that there's some businesses that you need equipment or some specific piece to get started, but there's a lot of things that you can do without the capital, or you can, to DeAndre's point, you can bootstrap, is what term we normally use, which is basically meaning I exercise delayed gratification. That means I don't do everything that I want to do. That means for the next 5 years, I don't take my family vacation that I spend $2,500 on or $1,000 on. And I take that money and I put it to the side for the next 5 years. And I'm going to use that $5,000 to start my company in 5 years. That's a delayed strategy, but it is something that people need to understand how to do. And I think that's something that we've gotten away from. Mr. Brown mentioned that, or Grover mentioned that, we are moving, we're moving away from what our grandparents did. And our grandparents did a lot of that. They saved money a lot. They didn't spend all their money. We spend all our money, and we go get credit cards and spend that money too. So we don't live out of that anymore. Put money under the mattress and and having $10,000 at the house because you've just been saving it over a period of time. So I would love to talk more about that and on a one-off conversation, but that's just my initial thoughts based upon what I saw.
Just one thing I would add, as it relates to the life insurance, I think that is one critical element to wealth, generational wealth, something that we should invest in, not as a tool to get cash flow, but a tool to get cash to the next folks that we're going to leave behind. And so that is one tool that I don't think our community takes full access to. And we, quite frankly, have had bad deals in our community as it relates to life insurance and things like that. But to that point, life insurance should be used for what it's for and not trying to manufacture cash flow out of such a tool because it's paying for the insurance, not necessarily creating the cash flow. To Reginald's point, that's really probably not what you want to do, and you won't get the return quick enough to invest into a business anyway. So you want to be very strategic and strict on what things should be doing for you and not trying to mix a bag of things that may work or may not work, because that can lead you down a path of disappointment as well. So I highly recommend that we figure out how to participate in this system. I saw a question saying, hey, these issues seems to have been issues 40 years ago. And that's absolutely right. And so again, until we lock in on what is the process, what do I need to bring to the table, what is my responsibility in it, we'll constantly have a need for, different exceptions. You don't want an exception. You don't want to have to go in and get a miracle on a deal. That's going to be a bad deal. I'm going to tell you straight up. That's why payday loans and things like that have the negative reputation that they do, but they're constantly being used. Is because people need the cash and go there and take a bad deal, knowing that it's a bad deal. So don't let desperation force you into a bad deal. Don't let urgency and trying to be too quick. One thing that our grandparents did is that they exercised patience. Things wasn't hitting the market every other 2 weeks for them. It took a while to build a house. It took a while to get access to land. It took a while, so they saved their money. They weren't out trying to get the newest, latest cars and clothes. I like fly things too. I'm not going to sit here and act like that's not the case. But to that point, delayed gratification, if I am building a business, it's no different than prepping for a baby. That baby is coming, right? Have I done the nesting? Have I created a room? Have I bought the crib? Have I did all the things to make my house safe? Have I invested the money, time, and energy for making that baby's arrival and survival and thriving a priority? Or is it just going to be, over there in the corner with the rest of the stuff? So we got to identify, do we have a side hustle or do we have a business? And once we make that determination, then that should show us what our next step should be.
Well, gentlemen, thank you. Thank you. I've enjoyed this conversation. Even though I'm going through the midst of a hurricane and I'm hearing outside, thank you. It's been very inspiring. I can't wait till we do it again. So, Dr. Vaughn, I'm going to turn it back over to you. And on behalf of this great panel, thank you for allowing us to participate in what I know is going to be a wonderful conference.
Thank you, Mr. Brown. We appreciate your moderating the panel. We did have one question. I appreciate Mr. Smith for your addressing that question. I know the gentleman has put a number of links and phone numbers and addresses. Also, Ms. Hitchens has asked if the panelists would put their contact information in the chat box, and I see that perhaps all of you have done so. Thus far, we had one question in the Q&A that came from it originally said it was anonymous, but I'll just go ahead and read the question. It says, I've done my research and have my business plan credit worthy and providing a need in my area. So as a startup business, how can I position myself to gain access to capital to start my trucking business?
Call us. You got our information. Call us, call me, call DeAndre. We'll get you started and you choose. But we're ready to go. You want a truck? That's easy. Trucks ain't never going away. So you pick, you call us, and we'll get you in the right place.
Okay, and that came from a Gwen Harris. So you may
and you
be able to.
Is that you said Gwen?
A. Gwen Harris. I know one, but I'm not sure
Okay.
if it's the same one.
Hey, so that means she's a female.
That's right.
That means so
We
she's
would love
already
that
good with that. That means that's a female. So that's a
Should be easy.
if she, that should be real easy.
Yes.
Okay.
Yes.
And we're laughing because we get to provide hope for people like that. And so people are like, well, and I get to explaining that, and they're like, that matters. It's like, yes, you're a woman, you're black, so you're double minority. So absolutely, there's a lot of resources that are out there.
Hey, just make sure you 51% on it.
Right.
At least.
So again, we will well equipped to assist with that.
All right.
Yeah.
Thank you so much. We're going to take a quick break, a quick 3 to 5 minute break while we get Ms. Pringle set up to give her talk for the rest of the afternoon. So let's meet back here at 10:32 after the hour in about 5 minutes. And thank you so much to the panelists and Mr. Brown for moderating.
Thank you.